Okay, so now we are in the section where we are talking about psychology. And it's incredibly important to understand that trading psychology is not complicated. It's about a couple of different concepts that we are going to talk about here. And now, after this first video that you watched that was extremely important, we are going to talk about how to take a loss. Because a lot of traders, like their worst fear is taking a loss. It's like, oh my God, I hope I enter in this trade and it's not a loss. Or, oh my God, I hope this trade does not turn into a loss. Everything that a lot of our emotion is based on the fear of taking a loss. And that's why I think that this is like the best continuation to the previous video that we have recorded. And so I want to talk about how I mastered taking losses in trading. And it's going to be important to know the concept of the previous video. So make sure to check that out either way. And right now we are going to talk about learning to take a loss. And so there's one key thing about taking a loss. That is that all the losses do not matter in the grand scheme of things. But every time you are emotional when you take a loss is because your mind has now shifted into thinking that this loss actually matters. But when in reality, it's like, it's just a loss. You will make it back. You maybe took a minus 0.5, minus 1%, but that doesn't matter when your average risk to reward is, for example, a 1 to 2, in which you can take 2 losses in a row, then take a winner and still be break-even / profitable. But when you focus so much on this loss or on this losing streak that you are currently facing, you completely forget the bigger picture that 1 or 2 trades will get you out of this drawdown. So a lot of the times when we are trading, we forget that at the end of the day, this is a game of probabilities, and because it is a game of probabilities, you don't know if the next trade is going to be right or wrong. You can make sure that you try your best to have the highest probability trade that is going to increase the odds of the trade playing out, but you can never guarantee it. And so with that being said, I want to give you an example. I have this SD card right here. I have this SD card. This SD card has the black and it has the image. Let's call it like that. So right now, let me say, I'm going to hide this and I'm going to ask you, okay, am I going to show you the image or am I going to show you the black face? Which one, and you are going to tell me right now, which one do you think that I'm going to show? Now, have you thought about which one I am going to show? So 3, 2, 1. Okay. I showed the one that has no image on it. Now, some of you said, I'm going to show the one with the image. And some of you said, well, I'm going to show the one without an image. And now you might say, and now some of you could be like, oh my God, I can't believe I got this wrong. Well, let's understand this. If every time, since this was a 50-50 chance, every time you got this right, I gave you $200, and every time you got this wrong, you had to give me $100. Would you play this game again because you just missed it one time? The answer is yes, because once again, it's a 50-50 chance. That means that you are going to be highly profitable in the future. But let's say that right now, I'm going to show you multiple times, very quick. So image or no image, right? Okay, so let's go. 1, 2, 3. Image or no image? Image. Image or no image? No image. Image or no image? Image. Okay, some of you probably got all of these wrong, right? But does that matter? No, because at the end of 1,000 times, you are going to be very profitable because the odds are so stacked statistically in your favor. But if on the first try you thought, oh well, this is rigged, Kimmel is doing something wrong, he knows what I'm doing, he knows if I'm calling image or not image, and that's why he's changing it, so this is against me. No, This is all just statistics where you have a 50-50 chance and the odds are extremely in your favor because of the reward. So what I mean by that is that every time you enter in a trade, you need to understand that the outcome of this specific trade has no meaning on the grand scheme of things of your trading. And that also means that every time you take a loss, the best way to avoid getting emotional about a loss is looking at the bigger picture. So some of you, this happens a lot, and I had a couple of students that had this, that they would enter in 2-3 losses in their challenge, and all of a sudden they would be like, well, I've lost the challenge. And I'm like, listen, you're 3% in drawdown. and you still have 7% in total drawdown that you can go through, and you just have to hit the profit target. But they became so emotional because they didn't understand that they just ran through 30% of their drawdown. That is not a lot because those were 3 trades. That's fine. What if the next one is a 1-3? All of a sudden you're at break even. What if the next one is a 1-2? Then all of a sudden you are in 2% profit. So in 5 trades, you went into deep drawdown, but you also got out of drawdown and now you're in profit. But this is only possible if you stick to the plan that you know is giving you this statistical edge. Because what you're doing is, okay, is this going to be face, or is this going to be no face? Is this going to be image, or is this going to be no image, right? And then when you change strategy, it's like, okay, image or no image, iPhone. It's like, you can't constantly be changing your edge because then you don't know what you're betting on because you're constantly adding new variables, right? Or let's say image or no image, and then all of a sudden I show you like the flat. Like, you cannot take a couple of losses and think, oh my God, something needs to change. This is not going well. I need to change this. Absolutely not. You need to look at your strategy as something that is going to play out in the coming 1 year, in the coming quarter, maybe even in the coming month. But every time you get emotional with a loss, you need to understand that the reason why you are getting emotional is because you are thinking short term. You are thinking short term. I've taken 10 losses in a row. I have. And it took me 1.5 months to get out of that drawdown. But over that time, I did not change my edge. I did not change my entry model. Maybe I changed the time frame that I was entering on, which is normal because, again, if you're taking a lot of losses, the best thing you can do is increase the probabilities of the trades that you're taking. And this normally happens through what? Through is no, then likely you just have to move on, right? If the answer is I'm not even going to be thinking about it in 1 year, or I'm not even going to be thinking about it in 1 quarter, then why are you messing your psychology up right now because of it? If you can't change, because you can't change it, and it's not going to matter in 1 year's time, because one trade out of 100 trades is 1%. So are you going to define your next 99 trades on 1 trade? Now, most of the time, you get emotional when trading when you don't expect a loss. And that's why I said that the previous lesson was extremely important, because your emotion is going to be based off expectation and reality. If expectation is different to reality, that gap is going to create emotion. So if you expect that this trade is going to be a winner, like a 2R winner, or you are going to make $1,000 and you actually lose $500, or you lose -1R, that discrepancy is going to be the amount of emotion that you are going to have. And so it's important that you understand that when you enter any trade, the best thing you can do is look for all of the reasons why this trade is going to be a loser. And no, you are not using the law of attraction. What you are doing is every single trade, is likely to be a winner, like if your strike rate is higher than 50%, is more likely to be a winner than to be a loser. But that means that 40%, there is a reason why this 40% is going to happen. And that's why I really recommend every time you enter in a trade, also write down all of the reasons why this trade is not going to play out. And my mentor told me that, and I was like, that is so weird. Why would I do that? If I'm entering in the trade, is because it looks good. But that's not really the case. The real game changer lies in the fact that if you understand that there are multiple reasons why this trade is going to be a loser, you are not going to be extremely shocked if the trade is a loser. You will already know the reasons why it is going to be a loser. So if I tell you right now that, hey, let me think. If I tell you right now that I'm going to slap you in the face, it's way better than me just slapping you in the face and you expecting me not to do anything to you, right? So with that being said, the same thing comes with trading. Once you enter any trade, look for all the reasons why the trade is going to be a loser. Obviously, the reasons why it should be a winner should outweigh the reasons why it's going to be a loser. But let's say that the trade moves, it goes into a little bit of profit and then sweeps a low, and your TP is at the next low and it starts retracing. Now you should be saying, well, we just swept this low, so it's likely that we are going to have a pullback, and because of that, this trade could be a loser. So as soon as you do that, you already have the mind ready for if this trade is a loser. The reason why this is so helpful is because afterwards, if the trade does become a losing trade, you'll understand, well, I was actually already expecting this because the trade swept the low. Like the market swept the low. We could expect a pullback. Hey, it is what it is. I took the loss. Because as soon as you're already thinking about the reasons why this trade is going to be a loser, you'll also be in the mindset of that's fine because long term, this is not going to matter. So you're killing two birds with one stone. Not only are you already removing the emotion because you're already expecting that this trade might be a loser, but while you are doing that, you are already thinking long term. That even if this happens, your decision still stands in that you are going to let the market play out in the future, and that will allow you to become a profitable trader. This losing trade is part of your edge. Because let's say that sweep of a low was actually something that would only give you 0.5 R return, and your final take profit was 2 R. Then you know that it doesn't really make sense to cut the trade short for 0.5 because long term you are really seriously hurting your edge. And so what you should do in order to master yourself when taking the loss is 1, bigger picture. As soon as you take the loss, ask yourself, how much does this matter for the next 5 years? How much does this matter in the next 5 years? Yes, ask yourself 5 years too. How much does this matter in this next 5 years? How much does it matter in the next year, quarter? Does that matter a lot? Probably not, especially if you're following good risk management. That's the number one thing. If you don't want to get emotional, use proper risk management. How many traders, they get emotional? Why? Because their expectation, this trade is going to be a winner. Reality fucking blew my account. That's why you're emotional. Because you're making bad decisions up front. You need good risk management. You need a good plan. You need to think long term. You need to understand that every trade has positives and negatives, and you need to know all those positives and negatives. And that is what is going to make you successful in the long term. So you're so focused on one trade, maybe due to poor risk management, maybe because you just want it to happen now, and that is not good. You cannot want it to happen now because the market does not care about giving it to you now. So what you have to do, think long term. What are all of the positives? Think long term. What are all the positives and negatives about this trade? These two go together. If you think about the positives and negatives, your mind is instantly going to be thinking, okay, I've made my decision to keep this trade on, which will allow me to think long term. Because if you do that when you're in drawdown, obviously you're going to be emotional because you're already expecting the winner. So when you enter in the trade, expect the loser. It's a very, very weird recommendation, but it's the most powerful recommendation for trading psychology. They will not tell you that. These courses will not tell you that. Why? Because they're keeping this simplicity from you. You don't need to overthink trading psychology. Most of it is all in your expectations and in the actual reality of your trading. I'm going to be a profitable trader next month. What if you're not? Well, then you're going to be emotional. I'm going to get funded with this account. What if you don't? Then you get emotional. You can't create these expectations that you have no control over. So, if there is something you have no control over in trading, expect the worst outcome possible. Because like that, you will see trading is going to change your life forever and your mindset is going to change forever. Because when you have control over something, about the quality of your trades, expect the best possible outcome. Expect you entering in the best trades and make sure you enter in the best trades because that is in your control. But if something is not in your control, expect the worst possible outcome. I'm going to talk to this girl. Okay, worst possible outcome. She says no. Go in expecting a no. You'll see this careless mentality and you'll see that you are most likely going to succeed. And even if she says no, it's like, oh, well, I was expecting that, so I move on. But when does the opposite happen? When do you get emotional about rejection? It's when you're like, oh my God, this girl is beautiful. I really need to talk to her now. I really need her number. And I really, you start creating these expectations. This is the woman of my dreams. I'm going to have babies with her. We're going to get married, everything. And then she says no. And you're like, fuck all of this. And that's going to be your reaction when your expectations are extremely high. Same thing applies to trading. So if it's not under your control, expect the worst possible outcome. This careless attitude is really going to help you not only in trading, but in life. And that's why I'm recommending you very, very, very deeply here. So if you do not have control over something, expect the worst possible outcome, but give the best of yourself. So just because you expect a loser, don't enter in shitty trades. Just because you expect this girl to say to tell you no, don't make any effort in wanting her to say yes. You still need to put effort in. You still need to forecast. You still need good risk management. You still need to think long term. But the outcome is not under your control. The process is under your control. So that's what you are going to focus on. You're going to focus on the process, entering in the best trades, journaling, risk management, execution. When talking to someone, being presentable, knowing what you're going to say, be interested in what this other person is saying. Right? You can't just be like, oh, I don't know, I haven't done this in a while. Hello. No. Like, oh well, I'll go fuck off. It's like, it can't really be like that. The same thing with your trading. Right? You can't enter in shitty trades and then either expect them to be a loser or directly expect them to be like you can't just enter in trash trades, expect them to be winners, or even expect them to be losers. You're entering in trash trades. You're already not being a profitable trader. So, with that being said, if you want to manage your emotions when it comes to taking a losing trade, it's all about expectation and reality. Reduce your expectations. Expect the trade to be a loser. Expect the worst possible outcome and execute with the best process. Think long term. You enter in a trade, it becomes a loser. Is this going to matter in a quarter? Is this going to matter in a year? Is it going to matter in 5 years? The answer is most likely no. So with that being said, now let's go into the psychology of winning. Hope you enjoyed this lesson. Click right here to watch the next one. And if you are struggling with overtrading, then click right here to check out Trade Blocker. Peace.